Good morning. Happy Friday. This is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda. Investors send US stocks to another record high as markets count down to today's key US inflation data. Fed Governor Chris Waller restates his call for lower interest rates. Lisa Cook sues to block President Trump's attempts to fire her from the Fed. Her lawyers say the alleged mortgage fraud was an unintentional clerical error. Plus, the German Chancellor says a meeting between Zelensky and Putin will not happen. This as Russian attacks on Ukraine's capital leave more than 20 civilians dead. So any concerns about slowing growth from Nvidia faded towards the end of the session stateside yesterday, with those gains coming through then a fresh record high and the S&P 500 breaking above 6,500, up a little over 10% now year to date, despite, of course, the trade war and, of course, the kinetic wars globally as well. S&P futures currently pointing a little lower by 0.1% after breaking through that 6,500 level. European futures a little softer by 0.1% as we build up for the final trading session of the week, of course, for European stocks. FTSE 100 futures just pointing to gains of 3 points so far in the session. Nasdaq 100 a little lower by 45 points, pointing down by 0.2%. Let's flip the board and have a look cross-asset. We've been focused, of course, on both the front end and the long end when it comes to US Treasuries. The benchmark 10-year currently yielding 4.21. Relative stability across the Treasury curve as we count down, of course, to the PCE, that gauge that we know is so important for the Fed later today. Does that change the betting around September for the first cut of this year for the Federal Reserve? We've been hearing from Governor Waller saying he wants to see one in September at least and more on the back of that. The GDP data revised higher in the US as well, 3.3%. That's worth factoring in terms of the gains yesterday that came through the strength of the US economy. Euro dollar at 116, Brent trading at $68 a barrel, down 0.6%, and the CSI 300 over in China currently up 0.7%, and Goldman Sachs revising higher their call for Chinese stocks. Now, investor focus is moving towards the Fed's preferred price gauge, as I mentioned, PCE, which is due out later today. It is forecast to reveal that US inflation quickened in July, and it comes as Fed Governor Chris Waller, who is in the running to replace Chair Jay Powell, once again called for a rate cut next month.
Based on what I know today, I would support a 25 basis point cut at the committee's meeting on September 16th and 17th. While there are signs of a weakening labor market, I worry that conditions could deteriorate further and quite rapidly. And I think it is important that the FOMC not wait until such a deterioration is underway and risk falling behind the curve in setting appropriate monetary policy.
OK, let's bring in Paul Dobson at this point, our executive editor for Asia Markets, Chris Waller as well. Also part of an audition, of course, for that Fed role at the top of the Fed come, April, May of next year. How clear is the glide path to September at this point? Is Waller the consensus call right now amongst those FOMC officials?
Yeah, good morning, Tom. I kind of think so. It feels to me like they've already made up that mind. Powell gave that signal at Jackson Hole. OK, there was a lot of nuance within the language that he used, and he left the door open for them to backtrack on that. But more or less, you get the sense that a lot of the Fed policymakers have 2 cuts priced in for the rest of this year. So why not get going in September? You've only got 3 meetings left. If you're going to do 2, then you might as well get on with it. And the market is pretty fully priced. You know, we're at more than 80% priced in for that cut coming in September, and then for another one by the end of the year. So if they want to kind of change the market's view and change that pricing or give a little bit of guidance, it's got to come pretty quickly now. My view is that Waller first cut is quite consensus. His argument that there needs to be a continual series of cuts, and the more dovish side of the spectrum that we're hearing from him is perhaps not quite in line with all of the rest of the policymakers, and so that might be more contentious. How many cuts are we going to see through the course of next year as well?
OK, so it's beyond September where it becomes arguably a little bit more of a challenge in terms of consensus amongst Fed officials. How do you expect the PCE data, Paul, later today, the inflation gauge for the Fed, to tie in to the Fed's thinking?
Yeah, so because of that, I don't think that immediately that gauge is going to have a huge impact one way or the other. The forecast is for it to show a little bit of a pickup in inflation again, which is kind of interesting, all things being equal. Obviously, the Fed would much prefer that inflation were falling, and people will be paying a lot of attention to see how much of it is tariff passed through, where it's showing up, that kind of thing. I think probably on the services side, there's some bias for an increase in inflation as well. That being said, it seems like the Fed is much more paying attention to the job side of the mandate at the moment, and worried about it after we saw those big revisions in the last set of data. So unless we get some big crazy shock in the next non-farm payrolls result, I think that at this point it's quite hard for the data to dislodge that view that the Fed will be cutting in September.
OK, Paul Dobson, Bloomberg's Asia Markets Executive Editor, on the preview around the PCE print and how it could tie into thinking amongst the Fed. Paul, thank you. Talking of the Fed and the concerns and the risks around Fed independence, Fed Governor Lisa Cook's lawyers are suggesting a clerical error may be behind a mortgage dispute, which led, of course, to President Trump's attempts to oust her from her role. She warns the move could cause irreparable economic harm. Joining us is Bloomberg's Balazs Pence, who's been covering all of this for us and monitoring the developments, and they continue to, of course, update on a daily basis. The war of words then, Balazs, between Lisa Cook and President Trump continues. A major step yesterday with this legal challenge by Cook and her team, and the case moves into court today, so another big day in terms of this dispute.
Lawsuit at the district court in D.C., and Judge Kopp has set a hearing for 10 a.m. Eastern time today, so we will get some continuation of this legal case. Very quickly, Lisa Cook's team is seeking an immediate order by the judge to stop the president's attempt to fire her and to stop the Fed from taking any action based on that order. So basically what she's asking is for the court to let her continue working on the Fed as we go into that crucial Fed meeting next month. Obviously, this will be likely a protracted, long legal case. The president has signaled that he's willing to fight, that he's willing to take on the legal challenge. The Fed, for its part, has said that they will abide by any court ruling that they receive. But this will be a very long process, and that will likely go all the way up to the Supreme Court. So today will be just the beginning of that whole litigation.
And we have details from Lisa Cook and her defence team in terms of how she prepares to put forward her case in this legal wrangle.
Yeah, that's right. The filing lays out a few things, a few ways in which Lisa Cook's team is trying to fight this presidential order. One of them being the merits of the case. They're arguing that the sort of dual declaration of primary residences was a clerical error. They also rolled out this argument that this caused no harm to anybody. That will be obviously up to the courts to decide. The part about the clerical error is important because that establishes that tries to establish that there was no intent, which would have to be proven for fraud purposes. But the other part of the argument is that the president's action is an attack on central bank independence and by extension could cause harm to the American economy. So that will be also something the court will have to consider.
OK, Bloomberg's Balazs Pence with the update there in terms of that legal case. Balazs, thank you. Now, Chinese President Xi Jinping's closest international allies, including the leaders of Russia and India, will be gathering this weekend for China's biggest diplomatic event of the year. The Shanghai Cooperation Organization Leaders Summit will be followed next week by a military parade in Beijing with guests including Vladimir Putin and North Korean leader Kim Jong-un. Our chief North Asia correspondent, Stephen Engel, joins us from the Chinese capital. He will be covering this event for us. Steve, let's start with the SCO then. This huge diplomatic event for Xi Jinping and his team. What is expected out of that?
Well, we're expecting it to be the biggest SCO on record. It's been around since 2001, but it's been a bit fractured because of basically some differences within the member nations. I mean, even China and India, they had a border skirmish 5 years ago. They are slowly starting to repair that relationship, due largely because of what's come out of Washington, D.C., with the threats of upwards of 50% tariffs on Indian goods because India keeps on buying Russian crude. So I think the geopolitical cohesive narrative that comes out of SCO as the 10 member nations, as well as another 16 observers and partners gather in Tianjin, the nearby port city from Beijing, and whether they really have a forcefully written statement saying that there is an alternative to the global world order led by the United States, and it is the global south, it is the BRICS nations, and it's those countries that are combined in the strategic alliance of the SCO. Secondly to that, or maybe even ahead of that, are there going to be the potential energy deals that we could see? Obviously, China is buying about 2.1 million barrels on average a day of energy from Russia. India is buying 1.9 million. So they are obviously getting a lot of criticism from Washington. Vladimir Putin will likely continue to try and sell more crude as well as gas, possibly resurrect the Power of Siberia 2 pipeline to China, which Xi Jinping has rebuffed so far. But again, Vladimir Putin is going to be here in Beijing looking to recoup some of those lost sales to Europe, lost obviously because of those sanctions. So again, the real interesting story is going to be the Modi-Xi-Putin dynamic. And of course, Putin and Xi continuing their no limits partnership.
Yeah, and in terms of that dynamic, to what extent then, Steve, does President Trump, does the US loom large over this summit?
Yeah, Donald Trump is the man who's not there on stage, but he is there in the sidelines. Obviously, the policies coming from Washington, D.C. And we've had this great Bloomberg scoop in the last 24 hours or so about this letter that we've learned that Xi Jinping wrote to his counterparts in New Delhi back in March, kind of testing the waters to see if there was an opportunity for rapprochement between New Delhi and Beijing. And it looks as though there has been. The détente has worked. Modi is here. It's his first trip to China in 7 years. It looks as though they're not going to let their border disputes and competitive disagreements get in the way of a flourishing and growing partnership in the face of those tariffs coming from the Trump administration. So clearly, the policies from Washington under Trump are at the backdrop and the forefront as well, if those are not competing themes here at the SCO, because again, they're trying to gain a credibility as a rival bloc, obviously, to the world order led by the United States.
OK, Bloomberg's Stephen Engel in Beijing, who will be covering this event, of course, for us in Tianjin. We'll get an update, of course, on Monday. Steve, thank you. Meanwhile, the IMF's first Deputy Managing Director, Gita Gopinath, is warning against complacency over global debt levels, citing fragility in bond markets. In an interview with Bloomberg, she reflected on her 7 years as the IMF's number 2 official and how the world has changed during that time. We'll get some views and we'll get that interview later in the show. But just flagging for you that we'll be hearing from Gita Gopinath, who, of course, has played a consequential role at the IMF at a time, of course, of global trade turbulence. Let's get you up to speed on what else is happening today in terms of data crossing. The focus, of course, on European CPI. We'll be breaking that for you later today. As inflation has been around that 2% target for the ECB, to what extent will this give us more information about where that central bank, of course, can go in terms of next steps? You can get a roundup, of course, of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to D8YB Go. Chris Waller's comments on the rate path ahead for the Fed, front and centre. Coming up, Chinese e-commerce giant Alibaba will report first quarter earnings later today. We're going to have the details on that next. Brutal price competition, a challenge for these e-commerce giants over in China. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Chinese e-commerce giant Alibaba is set to report first quarter earnings later today. This comes after an intense price war in China's food delivery sector, which is hitting the country's e-commerce companies, forcing analysts and investors to slash their price targets. For more, our Asia Tech correspondent Annabelle Drewers joins us from Hong Kong. Talk us through then, Annabelle, what we can expect from today's first quarter earnings from Alibaba.
Well, as you said there, I mean, it's really that big focus on what's happening in the food delivery space, that intense competition that Alibaba faces. I mean, it's interesting when you look at the stock performance over the last, say, 12 months, and it's still up around 45%. And a lot of that optimism has been a reflection of the investment it's making into AI and to the strength of the Alibaba cloud business as well. But of late and over the past few months, it's really that story around competition, intense competition in the food delivery space that's very much come to the fore. So JD.com, Meituan, Alibaba, these three are really trying to aggressively hold on to their market share and also to expand it as well. And they're spending heavily in this effort. So today, for instance, the key group to watch is going to be the local food services or local services group for Alibaba. That includes AMAP and Elimor. Both of those are expected, or that whole division is expected to report a loss in the June quarter for around $460 million. That's a little bit backward looking, of course, but even with the guidance, what we're expecting from the company, we really want to understand just how much more they're prepared to spend and how many more losses they're prepared to make. With the likes of JP Morgan saying, for instance, Alibaba has the most strength, they've got the most metal, and they're most prepared out of the three to also invest and to try and win this battle as well.
And on the focus when it comes to AI, and of course Alibaba is an AI player, but in terms of the chip producers, one of the key names that's come to the fore, at least for those of us outside of China in recent weeks, has been Cambricon, and the run-up in the stock price has been remarkable. And this is a company domestically based that produces these AI chips, Annabelle, but there's been this unusual warning from the company about that stock rally.
Yeah, I think you've got to put it into perspective. I mean, this is an AI chip designer, so it competes against Huawei locally. NVIDIA, of course, is the world leader in that space. So Cambricon has sort of been likened to maybe China's next NVIDIA. But when you look at the two companies against each other, Cambricon is a real minnow in comparison. Even their earnings, for instance, I mean, we had the latest net income, for instance. It came in at $144 million for the quarter. So it's a far cry off what NVIDIA just earned in their latest period of around $50 billion instead. So Cambricon has actually been rising because there's been so much optimism around China's self-sufficiency and self-reliancy drive when it comes to semiconductor technology. And so as a result, the company's actually just put out a filing to the regulators essentially talking about why people need to be a little bit cautious. Maybe the stock price has gone too far, too fast. There's reports, for instance, in local media that there's new products that are coming in the pipeline. Cambricon has pushed back on that, said there's nothing new that's in the offing right now or is prospected right now, reminding investors as well that it labours under US sanctions. That's something else that's a big pain point for the business. And also just talked about the general competition within the semiconductor space as well in China. So Cambricon's really trying to push back on that narrative. And you can see that, I mean, reflected in the stock price today, down around 8% right now.
Yeah, really unusual move and a nod, arguably, to the regulators from Cambricon. Annabelle Drewers, Bloomberg's tech Asia correspondent, of course, with that important update on Cambricon and a preview of what to expect from some of the e-commerce giants in China reporting later today, including Alibaba, of course. On the macro level, coming up, the IMF is number 2, warning against complacency over levels of borrowing in the global economy. We will bring you more from our interview with Geeta Gopinath. That is next. This is Bloomberg. The IMF's first Deputy Managing Director, Geeta Gopinath, is warning against complacency over global debt levels, citing fragility in the bond markets. In an interview with Bloomberg, she reflected on her 7 years as the IMF's number 2 official as she prepares to step down this week.
Pretty much, I think everything has changed. I started at the IMF in 2019, and that feels like that was the calm before the storm. And you had the pandemic, you had war in Ukraine, and now geoeconomic fragmentation. I think the global economic order is transforming in ways we haven't seen in decades. and it's still highly unclear where the global economy will settle. I think a second big difference between 2019 and now is on the fiscal front. Debt levels are incredibly high. They are ever increasing. And while in the past you might have said, so what, markets will take it, that's not the case anymore. Even in advanced economies, you see that in France, the UK, and also in terms of long yields in the US. And I say the third big change is on technology. AI over the last few years has certainly caught the imagination of everybody, huge promise, but also huge risks.
How has the IMF's role changed during this period, given that it was set up under a very different infrastructure at a time when a lot of people are saying we're now in the post-Bretton Woods era?
The IMF has great experience dealing with turbulence. You know, there was a period when you had the end of Bretton Woods going off the fixed exchange rate to the dollar and the dollar to gold. That change happened and the IMF adapted. And we are obviously now in a world with big shifts in terms of how countries work with each other. The IMF has always functioned as trying to do the art of the possible, which is do the best you can given the constraints, and done it very successfully. So if ever there was a time for this institution, it's super important now. It has the ability to bring different countries together around the table, good discussions to happen in the economy, on the outlook. Again, a very vital institution for the world.
Do you see a risk that it doesn't survive, though, at a time when funding is really in question with a lot of major economies? We've seen China go it alone. There have been questions about the United States.
Firstly, the IMF's funding structure doesn't rely on any budgetary support from any country. So it's in a very strong place because of that. And everything we've seen so far points to all the members wanting the IMF to continue functioning as it has. We work very closely with the US administration. That engagement is going extremely well, but also the other 190 member countries that we have. So as of now, lots of support. Of course, the environment has changed and the IMF is going to adapt to it in this new geopolitical environment that we have, but it has a lot of experience dealing with these kinds of events.
IMF First Deputy Managing Director Geeta Gopinath speaking with our colleague Lisa Abramovich. Now, some other stories making the news today. A US trade provision dating back to the 1930s, which eventually cleared the way for almost 1.4 billion small parcels each year, came to an end at midnight New York time. The de minimis tariff exemption allowed packages worth up to $800 to enter the US tariff-free. The Congressional Budget Office estimates the move will raise more than $23 billion in additional tariff revenue for the government over the next decade. The European Union has adopted draft regulations to remove all tariffs on US industrial goods and give preferential treatment to some US agricultural and seafood products. It follows a demand by President Trump, of course, and the Commission says this will pave the way for the US to lower its tariffs on European cars and auto parts to 15% from 27.5%. Coming up, has French Prime Minister François Bayrou got the political muscle to survive the 10-day fight before a vote of no confidence in his government? We will get the latest from Paris next on what, of course, has been a volatile week for French assets. Stay with us. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. Happy Friday. These are the stories that set your agenda. Investors send US stocks to another record high as markets count down to today's key US inflation data. Fed Governor Chris Waller restates his call for lower interest rates. Lisa Cook sues to block President Trump's attempts to fire her from the Fed. Her lawyers say the alleged mortgage fraud was an unintentional clerical error. Plus, the German Chancellor says a meeting between Zelenskiy and Putin will not happen. This as Russian attacks on Ukraine's capital leave more than 20 civilians dead. Let's check in on the markets then, in the context, of course, of that fresh record high for the S&P 500, breaking through 6,500. Stronger economic data out of the US, revisions to GDP to 3.3% from 3%. Good data is good news for the equity markets. That was the mood yesterday as we look ahead to inflation and PCE, which we know is so important for the Fed later today. European futures, after a bit of softness by the end of the close yesterday, pointing lower by 0.2%. Here in the UK, the FTSE 100, though, looking to add just a mere 2 points so far in the session. S&P futures, after that record high, a little softer by 0.1%. Nasdaq 100 futures pointing lower by 51 points. Let's flip the board and have a look across asset then. Yields up 1 basis point on the US benchmark 10-year right now at 4.21. Chris Waller making the case for that September cut and more beyond. Eurodollar at 1.16. The single currency then down 0.2%. Brent at $68 a barrel. Softer on oil by 0.5% and set for a month of losses. And the CSI 300 over in China gaining 0.5%. Goldman Sachs revising their targets for Chinese equities that, of course, have performed very well year to date. Now, earlier this week, from performing strength in terms of equity markets over in China to weakness over in France. Earlier this week, the so-called French risk gauge hit a 7-month high, with France's benchmark bond yield premium over Germany topping 80 basis points. Our guests weighed in on the market implications of François Bayrou's battle to survive as Prime Minister in next month's confidence vote.
We have a playbook. We went through this last summer, and spreads went all the way to 80.
The ECB, I'm sure, will be ready to support France.
For France, we're talking about contraction. Full year earnings expectation in CAC current is minus 10%. You don't buy cheap sectors, cheap countries, cheap regions where earnings are falling.
Well, let's bring in at this point Bloomberg's Julien Pontus, who joins us out of Paris covering equities and the French equity space for us. Julien, what a week it's been then for French assets. The week that was, where do we stand this morning, Julien?
I think, as one of your guests said, we're pricing that Bayrou will fail and that he will lose the vote. But that's not a catastrophic scenario. That's more or less priced in. As you say, the gauge of risk is at 80. But people, investors, I think, are quite used to that level. I think French investors on, French equities on the CAC 40 have made their peace with the fact that they will underperform Frankfurt, Milan, and Madrid. These three countries, for their indexes, are up over 20% year to date. France is at roughly 5%. So that's where we're at. You could say there could be possibly a good surprise next week if ever Bayrou managed to pull something through. But when you look at betting markets, betting websites, you're over 90%. Like, no one is thinking he has a chance, even though he still claims he does. He did so yesterday. But I mean, honestly, there's no way. In fact, it's really hard to see a way for him to pull it through.
Okay, that window, if there is one, is and that gap is narrowing rapidly, it seems, or has already narrowed. And he continues his outreach to domestic voters in France, trying to make the case for his domestic agenda and the tax rises and spending cuts that he is proposing. Given that assessment, then, Julien, what are you and the team kind of bracing for next week when it comes to the markets?
No one really sees, it's not me, but no one really sees him pulling it through. The far right and the far left want new elections. Basically, no one seems ready to help him. You do the math, you look at the difficult parties, how every lawmaker could move. I don't see it going through. Then, what does Macron do? He could reappoint him. Seems unlikely. He could find another center-left, center-right politician to do exactly the same thing as Barnier and Bayrou, who both failed. Or he could call new elections as well. That's what we're basically bracing for, because if there's a new snap election, then the game could really change for France.
Yeah. Okay, Julien Pontus with that update. Thank you very much. And team, it's been a busy week, of course, for you and the team. We appreciate it. Meanwhile, we're going to get a deluge of euro area inflation data today. Bloomberg analysis suggesting that the flash readings for August will tick up due to energy base effects, while core inflation will probably dip slightly. Bloomberg's Lizzie Burton is here to look ahead to the numbers. Lizzie, what are economists expecting then from the August inflation print? Walk us through the expectations.
Well, of course, it's a big day for inflation prints on both sides of the pond. But if we look at Europe, you've got four big ones. At 7:45 a.m. London time, it's France. That's expected to stay at 0.9% because of energy, as you say, because of the drop in regulated energy prices. Then at 8 a.m. London time, we get Spain, and it's also about energy, but that's upward pressure from energy prices. So they're expected to tick up from 2.7% to 2.8%. Then at 10 a.m. London time, we'll get Italy, expected to tick up from 1.7% to 1.8%. The lower energy costs offset this time by higher goods prices. And then finally, Germany at 1 p.m. London time, expected to jump to 2%. But our economists actually see 2.1%, so above the ECB's target, and that's from 1.8%. It's driven by higher road fuel costs. Broadly, though, Tom, if we just take a step back and see the bigger picture, it's a disinflation process that's happening across the euro area economy because, of course, we've got the stronger euro on the flip side of the weaker dollar, and you've got the tariff uncertainty. Yes, the Commission got that deal with the US at 15% tariffs, but the uncertainty continues, and that leaves the risks tilted to the downside. So, for example, just on that uncertainty, of course, you've got the EU now proposing to remove all tariffs on US industrial goods so that cars can qualify for those 15% tariffs. So as things like that continue, the point is there are still moving parts.
And you are an in-house ECB watcher. So very briefly, Lizzie, where does this leave the ECB?
Well, if you look at the minutes yesterday from the ECB's July meeting, broadly, they said most officials see risks tilted, broadly balanced, but that another cut may have been mentioned, but at the next meeting, September the 11th, they think they're going to be on hold.
Lizzie Burton, thank you very much indeed with that preview of data and what it could mean for the ECB. Now, some of the stories making the news. This Friday, Denmark is cutting its forecast for 2025 economic growth by more than half amid weaker prospects for pharma giant Novo Nordisk. According to government documents seen by Bloomberg, GDP is expected to expand 1.4% this year. That is down from the government estimate in May of 3%. The government cited US tariff increases and a weakened outlook for the pharmaceutical industry, of course, as drivers for that revision. And a think tank says the UK could raise more than £32 billion over 5 years by imposing a windfall tax on commercial lenders. The proposal from the left-leaning Institute for Public Policy Research says the government should recover the profits banks are making from taxpayers on deposits held at the Bank of England. It says high street lenders have enjoyed a, quote, staggering state subsidy on the BOE's QE programme in recent years. Coming up, they are three of the world's most important energy exporter and consuming nations. We discuss how commodity markets are eyeing a key meeting between Putin, Xi and Modi. That is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. To Iran right now, which faces the prospect of tough international sanctions being reinstated by the UN. The so-called E3 nations, UK, Germany and France, have triggered a 30-day snapback process that would lead to a resumption of sanctions originally lifted as part of a 2015 deal. Let's get more from Bloomberg Horizons anchor Germana Pesecci, who's been following this for us. Germana, what exactly then did the three European nations announce yesterday? What is the read across to the US in terms of those potential talks with Iran?
Yeah, quite significant developments there. So these so-called E3 countries, Germany, France and Britain, informed the UN Security Council last night that they were looking to reinstate the sanctions that had been suspended since the advent of the 2015 JCPOA deal. And of course, remember, President Trump famously pulled out of that deal in 2018. But the remaining participants of the deal include the EU, those E3 nations, Russia and China. And it is very notable that they're now saying for the first time since 2015 2015, they are ready to reimpose sanctions again because they believe that Iran is not abiding by its commitments. Now, in terms of the sequencing, there is a 30-day snapback provision. And so during that time frame, the UN Security Council will then assess to see whether Iran has met their commitments. If they deem they have not, then those provisions go in. The timing here also potentially quite crucial, Tom, because on October the 1st, the chairman of the Security Council flips from South Korea to Russia. So maybe the Europeans wanted to get this ahead of that timing, ahead of October 1st. You know, obviously that's speculative. But the point here is that sanctions could be reinstated. And this is after months of failed talks going on between the Europeans and Iran. The Iranian response came very quickly yesterday. The foreign minister saying that the action is unjustified, lacks any legal basis. Not a lot from President Trump, which is uncharacteristic of him, though we did get a statement from the Secretary of State, Marco Rubio, saying that the United States does still remain available for the diplomatic track. And remember, those talks have also been stalled since the war over the summer, with President Trump claiming that he's completely obliterated Iran's nuclear capabilities. It's unclear whether that is actually the case because IAEA inspectors still do not have access to the sites that were bombed. Ultimately, though, President Trump still is pursuing a maximalist approach, zero enrichment. That seems like it's unlikely to fly with the Iranians. So there's still a lot of daylight between the two sides. But it does seem as though we are on track once again for further sanctions to be applied on Iran in as soon as 30 days' time.
OK, and to your point, we'll see what that does in terms of those potential negotiations. Jemana Pasechi joining us out of Dubai with the latest when it comes to the pressure being ramped up again on Iran. Staying with geopolitics, German Chancellor Friedrich Merz says a meeting between Ukrainian President Volodymyr Zelensky and Russia's Vladimir Putin is unlikely to materialise, even though it's been touted by US President Trump, of course. Russia unleashed a new wave of drone and missile strikes on Kyiv yesterday, killing at least 20 people. The attack comes in defiance of US calls for an end to the fighting. And Russian President Vladimir Putin has a rare opportunity to meet with his two most important energy partners, China's Xi Jinping and India's Narendra Modi, this weekend at a time when he needs something from both. This comes as oil heads for a monthly loss, with trading dominated by concerns about a looming glut. To discuss this further, I'm joined now by Nadia Martin-Wiggen, director of Svelland Capital. Nadia, always great to get your insights. We can expect, no doubt, President Putin to be seeking assurances from both India and China that they'll continue to buy Russian oil. But the pressure is coming from the US administration right now. 50% tariffs on India are in place. If we do get to a point, we haven't seen evidence of this yet, but if we do get to a point where India starts to rethink its Russian oil purchases, what would you expect the impact to be?
Well, the first impact would be a reduction in the price on Russian crude oil, because we do not expect that a step away from purchases by India of Russian oil to immediately shut in that production. So Russia exports from the West around 1.5 million barrels per day of crude. And that is what we're talking about really being at risk here. India takes 36% of its crude from Russia. Up to, so if we say that's around 1.5 million barrels per day, up to 500,000 barrels per day of that could go to China in a replacement. And that's why these talks are so important if there were to be an actual diversion of crude.
OK, that's really interesting. China could step in and absorb some of that flow. What specifically, Nadia, are you going to be looking for then when it comes to this meeting between these three leaders on the energy front?
So the first point is how is the mood? Are they standing together? Is this alliance that also is part of BRICS, is it very much intact? And China, for example, they have a rule that they're not supposed to take more crude from a single country of 20 to 25%. If they were to take on these additional barrels, they would be breaking that. But on the other hand, it's not only about countries, it's about diversification of routes. So via pipeline and via seaborne. And as I said, this is westbourne through the Black Sea, largely exports that we are talking about. The second point is also on the gas side of things. Right now, China is taking 10% of its total gas from Russia via pipeline and possibly increasingly via LNG, because we heard that the Arctic 2 LNG sanctioned facility actually may have suddenly delivered a cargo to China. So this is where we want to see how is that growth intact. And when Trump is putting this pressure on India, we have to gain perspective, right? Right now, if we were to open all the pipelines that are available between Russia and the West and Europe, we would have a total of 960 terawatt hours. 2/3 of that would be coming through Nord Stream 2 that had never come before. 1/3 would be coming through Ukraine, which right now doesn't seem that they would have any interest in doing that. If we compare those 960 terawatt hours, what Russia wants an expansion in gas exports to China to be is a potential 1,254 terawatt hours. So it's a much bigger growth. And that would come via 3 channels. A further expansion of the Power of Siberia 1 pipeline, which is already running. So it could double in theory on the amount it could run. Full utilization of Arctic 2 LNG. And also having a new pipeline, the Power of Siberia 2. And so when we think about LNG, that's in direct competition with the US as a potential LNG provider. And then the pipeline could provide much cheaper gas for China relative to the world market. So this meeting is super important for President Putin in keeping those alliances.
Well, what are the Chinese demand dynamics right now? Does China have the demand to absorb that?
Absolutely. I mean, China right now is taking 10% of its gas is coming from Russia. They are doing everything they can to expand their own production, and that is expanding this year. We expect, if you take Sinopec's numbers, 3.7% year-on-year gas demand growth internally in China for the next 5 years. But we can easily see that being 5.6 to 6% higher year-on-year. And that's why these talks are also important for the world LNG market, because we have a lot of supply coming this fourth quarter with the ramp up of Plaquemines in the US. And next year we have growth coming both from Qatar and the US. So it's very important for the world market also how these talks expand, and these expansions on LNG, liquefaction and exports are expected to continue for the next decade.
Nadia, before we let you go, we've been talking about the fact that oil is heading for a monthly loss. What are your expectations? What are your forecasts for oil pricing through the end of the second half of this year, given concerns about that supply glut?
Yeah, so we do have balances building around 2 million barrels per day in the fourth quarter. And we have had some softening and some small builds in the third quarter. I think the big backup has been that we've had 500,000 barrels per day per quarter of refinery closures in the Atlantic Basin. And as a result, we've had refiners running at full throttle, and yet we haven't built product inventories. In particular, we're still low on diesel. We expect those builds to finally come in the fourth quarter. So especially into year end and into the first quarter of next year, that's when we see the builds really coming and weakness coming in the Brent curve, which has been super backwardated. And that's why we haven't been building the storages. We also have refinery capacity expansions coming of around 500,000 barrels per day globally, led by the Middle East. So this is very positive for shipping because we need to actually push that crude into Asia. Last thing, we have 500,000 barrels per day of refinery outages in Russia right now. And that means more crude to come out of Russia and tighter products.
Okay, fantastic analysis. As always, Nadia Martin-Wiggen, Director at Svelland Capital. Thank you. Meanwhile, Kaja Kallas has been speaking as EU defence and foreign ministers meet in Copenhagen. The head, of course, of the EU Foreign Affairs Department, the foreign minister for the EU, speaking and responding, of course, to Russia's attacks on Kyiv. And you can see that the EU Foreign Commissioner is talking there and saying more pressure needs to be put on Russia. There's plenty more coming up. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. So that first quarter contraction we got for the US economy looks like a bit of a blip, doesn't it? When you look at the revised second quarter that came through yesterday, 3.3% was the revision. There's been a tick up in terms of business confidence and business investment and consumer sentiment as well. And that has driven up GDP in terms of the revisions for the US. So a stronger US economy, the good data reflecting as good news for US equities yesterday, with the strength coming through, of course, and the S&P notching another record high. Let's flip the board, though, and have a look at the question marks around the inflation story. We get more details on this with PCE, of course, coming through later today. This is core PPI. That's the blue line, 3.7%. Core CPI expected to tick up to 3.1% year on year, of course. And core PCE, this is the one that's dropping later today, estimated to come in at 2.8%, roughly in line with the previous month. These are July figures we're expecting, of course. How that ties in to the pricing around September. Does it derail September? Seen as unlikely, according to the analysts we've been speaking to. Chris Waller saying he wants to see that cut, of course, next month. But PCE will be closely watched later today stateside. Let's flip the board and have a look at the more immediate picture when it comes to inflation out of the Eurozone. We're getting key numbers from the likes of France, Germany, Italy and Spain later today. You're still roughly around, of course, the ECB's target. We've heard from some ECB members in recent days and weeks suggesting they are pretty comfortable in terms of the settings around monetary policy right now. But the inflation data, of course, could adjust those views, and we'll be breaking that for you through the opening trade. On Monday, our Brussels newsletter, by the way, gets a fresh look with Bureau Chief Suzanne Lynch at the helm. Sign up at bloomberg.com/newsletters. Opening trade is up next. This is Bloomberg.